Hello, traders. It's 8:03 a.m. Chicago time on Monday, the 13th of April, 2020. This is episode number 1732. I want to remind everyone that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's a little soft as a result of a couple things. One of the important reminders here is that the European markets are closed today, so we naturally expect the overnight session to be light in volume. The overnight session in the S&Ps has traded 245,000. We've been seeing 300 to 400,000. So it is definitely a little bit light. And of course, if you look at your if you look at your performance, market performance, you'll see that the DAX and the Euro stocks still showing a strong positive, and that's really from Thursday's close, which was relatively strong. The overnight session shows a risk-off sentiment. The Russell is down 9.7 points from Thursday's close, trading 1234.5. That's the actual price right now, 1234 and a half, down 0.73%. Gold is off $13.30, trading at 1739.50, and crude is leading the pack versus Thursday's close at 22.99, right there at the 23 handle, up 23 cents, 1.05%. Crude's got a fair amount of volume in it already, 302,000. So that's where we stand this morning. The expectation was for the market to gap down big, and but really what it has done is it has opened, and we'll cover this in a minute. The U.S. markets opened in the Sunday night session and pushed up to make new short-term highs at 18, 19.50, and have pushed down to 27, 27.17 and a quarter. Uh, a big swing there of 102 points, 102 points in the S&P. So that's where we stand. The S&Ps currently are working themselves back. We're only 15 points away from Friday's close. The S&P is down 6.75 from settlement, uh, only down about 24 basis points or 0.24%. So overall, bearish on stocks, and this week we have earnings kickoff in the U.S. with the banks kicking off early. I think J.P. Morgan and so on. Keep an eye out for that. Many stocks have withdrawn guidance. Others have guided much lower, expecting volatility to take place as a result of this. This is the start. This will be the start tomorrow, with us getting a peek at what effects this COVID-19 has really had on earnings. So that's where we stand. Um, so let's get into what's expected for today. The calendar has very little on it. Again, um, uh, the markets in Europe are closed. Nothing out of the U.S. market. There is a G7 video conference meeting taking place today at some point, and then at 8:30 Central, 9:30 Eastern, Australia announces its NAB business confidence, expecting negative 15. The week ahead has a few key releases. We do have Feds Bullard and Evans speaking tomorrow. We do get the Westpac consumer confidence out of Australia tomorrow. API crude oil stock change Wednesday out of the U.S. I'm only covering high impact releases. Wednesday we get retail sales. That's expected to be important. It shows us the condition of the retail market. now that everybody's sitting at home. And then we get the Bank of Canada rate decision also on Wednesday, business inventories, NAHB housing index, crude oil stocks, Fed's Bostic, and then that brings us into Thursday. We have jobless claims this Thursday, expected of 5.375 million initial. Continuing initial claims expected at 4.72, and so that's an important one to watch. If you recall, last week we got it on Thursday and it was pretty bad, but at the same time, Fed's Powell released a comment, an announcement that the Fed is going to use another $2.2 trillion facility to support the economy. We got GDP growth out of China on Thursday at 9 p.m. Central, 10 p.m. Eastern, and that brings us into Friday, where we get some Eurozone numbers, core inflation and construction output. So that's the week ahead. Let's take a look at what was expected on Thursday versus what we got. But first, I want to make sure that you guys know uh, I'm really thrilled to have Jeff Snyder of Alhambra Investments coming on a Wednesday afternoon at 3:30 Central, 4:30 Eastern. Jeff is a frequent guest on Macro Voices, and the reason I asked him to come on, and I'm very pleased that he agreed to come on, uh, is to discuss repos. As you recall, the repo market saw some historic moves from September through December, and then we saw the stock market respond with what the Fed was doing in the repo market. So this is kind of a spotlight on the repo markets and what those mean. And also, I'm going to ask Jeff, who's just amazing to listen to, actually, very detailed guy. I'm going to ask Jeff what he thinks the current situation is going to play out like for the rest of the year in the terms of the markets and the economy. That's on Wednesday at 4:30 Eastern. To register, and please do go to ct.pro/repos lowercase. Go to ct. Go the digit to ct.pro/repos. This is sponsored and hosted by Convergent Trading. Just take a moment now to go to that URL and get it and get registered. Here's what was expected on Thursday. Thursday, we saw ourselves opening up in a gap, 27.77 or so. The expectation is that we would touch the 27.83 high, pull back to 27.52, and then hold steady and close somewhere around where we open. That's the primary expectation. The secondary is that we make a push towards 2,800, but come back towards the open as well, finish up around 27.77, 27.78. The third scenario, is that we push the overnight high. In either case, I was looking for a push of the overnight high, in case you didn't notice, for a response back, and then we would fall into and hold 27.35. Remember, this is the high volume node down here. So the primary scenario is a touch of the prior day's low high, which was at 27.5250, for a pushback up, and so on. Here's what actually happened. What we had on Thursday is a combination of both scenarios. This is my 6-tick Renko, still pretty noisy, and what we see here is the market pushing up above. We open up at 27.73. We push up above 2,800, and we come back in line. Very choppy trade on Friday, and then we ended up pushing to 28.09. Let me check that. 28.0950. I'm correct. And then what do? We go down and close that gap zone by a tick. It's easier to see on the 15-minute. Here it is. We turn off these stock zones. So we open and we trade on both sides, pretty much an open auction. Unable to get into the gap zone after the first hour, so there's a probability that we're not likely to close. So at this point, I'm writing off scenario one. And then what we ended up doing actually is pushing to 2809 and then falling through and then tagging the prior high, which is 2752 by 20, 2752.50. We ended up tagging it by one tick to close right on top of the point of control, mid, and VWAP right in here, right in that 2780 area. Remember, the expectation was that we would push up or down, scenario one touching the prior day's high, scenario two pushing through 2800, and then we end up on both scenarios somewhere around 2777. 2777, and that's basically what happened. We played two scenarios on Friday, both at the same time. The delta really taking a bit of a hit, and the volume was way off because we're coming into the holiday here. Volumes are likely to be off. If you notice the black line poking through and above, volumes are likely to be off. For the next foreseeable future here on the close, because what we had during the volatilities, we had massive moves on huge volume taking place on the close, and those are factored in. Those are being factored into the fact that they're being factored into the 20-day average that I'm using to compute things here. So again, the 15-minute, you could see the line is not getting exceeded. So things are really slowing down as we're pushing into this big area. If you recall, I outlined this important area around 2781. There's a little bit of fluff here. We are still stuck at the mid of this entire swing. If we look at the entire swing down from 33.80 to 50, this is adjusted for rollover, all the way down to the most recent low of 21.79 and a half. We pull with the 50% fib or pullbacks 2781. This remains an important area for the bears to defend, in my opinion. This is likely to be a battle area still. We still have that high volume node beneath us as a magnet, and we still stand in the same position. Friday closed the gap, but we ended up with a doji, a bit of an undecided kind of position. So on Friday, we ended up with a neutral normal day. We broke the IB high, we broke the IB low, and we finished in the middle, and we are completely imbalanced. So pay attention to Friday's value area. Friday's value area is 94 and a quarter on the high, 27.70 on the low. The overnight low is 27.17, and the overnight point of control is 27.45. This is what happened in the overnight session right here. We pushed down and we formed this long zipper because Europe is closed. There isn't a push at the usual 1 to 2 a.m. Chicago time. We don't get a move here, and we end up building this point of control that's very, very clear, and a clear rejection above that opening price from Friday at 27.77 area. Everything above there appears to be an excess high in the overnight session, and balance with balance remaining down below. Balance really between 2760 and 2730 right in here from the overnight session. Again, volume in the overnight session is relatively low for obvious reasons. The overnight inventory is mostly short, and the market is currently climbing above the mid of the overnight session and moving away from the point of control. It's being responsive, and I'm expecting it to continue to be responsive into the current session. If we look at the order flow, let me just Pop this in here real quick. If we look at the order flow in the overnight session, I'm using ctbookmap.pro for this. We see how things have played out. We open up, we drop pretty quick. Not seeing steady liquidity anywhere except at this 2785 area that's above us, and we have been basically grinding our way up into Thursday's close, which is a 2780. So what we have is a market that has tested below and is becoming responsive with liquidity areas at the option strikes, mainly 2780, a little bit of 2790, a lot of 2800, and so on. So here 2780's got some liquidity, 2785, 90 a little bit, and then 95 and 800 above, 800 being one that's been around for the entire session. 85, I'm expecting this to challenge this 85 area. I'm expecting us to open where we closed on Friday with very little underneath in terms of steady liquidity. So my expectations for this session are quite muted. Not really looking for an earth-shattering type of market or trading this morning. So again, I want to remind everybody that, we're having Jeff Snyder on. He's an investment manager who's going to be talking about repos on Wednesday at 3:30 Central, 4:30 Eastern, and then we'll ask Jeff, who was pretty much spot on from February onwards, as to how the economy is likely to react to what's coming in terms of COVID-19 and so on. But we are going to get a crash course in repos. They're credited with moving the market from September onwards, a huge rally into the new all-time highs. We're going to talk about that, and we'll get his opinion on what he sees going forward. Let's take a look at what's expected for today. For today, the plan. Pulling up my whiteboard here. For today, here we are. We are very, very close to where we were. That looks very close to where we were or closed on Friday. I'm expecting an open auction. I'm expecting a choppy open. With some responsive buying back towards the value high of 94. I'm expecting that liquidity to hold us a little bit, and then it may challenge 2,800 again, but I'm looking for the market to actually start moving up and being responsive as opposed to down as expected by the overnight session. We have a mixed overnight session. This morning, I'm looking for the market to actually work itself back up to 2,800. Secondary, an open that attempts to move higher, consolidates, and then starts to move lower into the value low, hold steady, and then start to move towards the key stock zone areas down below. And if it starts to give way, then we are likely to see a more exaggerated move towards 34, the high volume node, if we start to take out this IB low or get below and hold below this 2767 area. But mainly I'm expecting the market to kind of chop and likely grind higher. Okay, so that's what I'm looking for this morning. I'll leave you with those two main ideas. And again, I want to invite you to register at go2ct.pro/repos. Jeff will be taking questions on Wednesday at 3:30 Central, 4:30 Eastern. Take care, everybody.